Hey, good morning, everybody. Today is Friday, July 22nd, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 17 came from real estate investment trusts, 11 came from biotech, 6 from auto parts, 6 from packaged foods, and rounding out the top 5, we had 5 stocks from the restaurant industry group in the top 100 most powerful stocks in the most powerful industry groups. These may be good places to look for leadership in this market. Let's take a quick look at the Nasdaq Composite. Yesterday, the Nasdaq was down 16.03 points, or 0.31%. Trading volume was higher than the prior day, giving us a distribution day. We closed at 50.73. For you followers of William O'Neill, we are in a confirmed uptrend. We have been since June 30th, and we have 2 distribution days since confirmation. Distribution's a sign of institutional selling, and we don't like to see a lot of distribution over a 30-day period. 2 distribution days isn't a lot of distribution and isn't really a cause for concern, but these 2 distribution days coming back to back is worth noting. Right now, the Nasdaq seems to be bracketed by support down here in the 49.69 area and resistance at this long-term trend line. Notice how we bumped our head against that trend line again. This trend line has been significant resistance for the Nasdaq over the past 2 years or so. Worth keeping an eye on. If we were to break through that trend line, our next significant area of resistance is up here in the 51.64 area. Our market timing model is on a buy signal, and a buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's take a look at the S&P 500. But before we do that, stocks finished Thursday lower on heavier trading volume, giving us what I would call our first significant distribution for both the S&P 500 and the Nasdaq since confirmation of the current uptrend on June 30th. Yesterday was actually the second distribution day for both, but the other days on both indices were low volume isolated events. Distribution occurs when one of the major averages closes at least 0.2% lower on heavier trading volume than the prior day, and is generally accepted as an indication of selling by professional money managers that move the market. Too much distribution over a short period of time can be a sign that an uptrend in the market is in trouble. That noted, the Nasdaq and the S&P 500 held above significant resistance, which now becomes support. For the Nasdaq, that's the psychologically important 5,000 level. For the S&P, it's the May 2015 high in the 2134 area. It would be constructive to see any market consolidation hold above those levels. Our market timing model on both the Nasdaq and the S&P is on a buy signal. The buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating a confirmed uptrend in the market with 2 distribution days on both the Nasdaq and the S&P 500. Yesterday, declining issues edged advancers by about a 4-3 margin. New highs continued to handily better new lows. That noted, our new high, new low indicator flashed a sell signal here. The new high, new low is frequently the first indicator to note a change in market direction, but is often premature. According to our Ramosi ratio, large capitalization stocks bettered small and are now outperforming on a 10-day moving average basis. Bulls prefer to see small caps outperform. We're on a buy signal on both the S&P and the Nasdaq, but the current advance appears to be losing steam. While traders should be fully invested, or at least approaching fully invested, they should also be keeping their stops in place and current. Okay, yesterday the S&P 500 was down 7.85 points, or 0.36%. We closed at 2165. Trading volume was heavier than the prior day, giving us a distribution day, or a day of professional selling. The S&P 500 is in a confirmed uptrend. We have 2 distribution days since confirmation of the uptrend on June 30th. That's not a lot of distribution and isn't really a tremendous concern for the S&P. Right now the S&P is bracketed by support right here in the 2134 area. That's the May 2015 high. And we really don't have any resistance. The S&P is at new all-time highs. Our market timing model is currently on a buy signal. Okay, let's talk about swing trading. Swing trading is a faster, shorter term form of trading than can-slim trading. In swing trading, we'll attempt to always trade in the direction of the short-term market as defined by the relationship between the Nasdaq Composite and its 5 and 10-day simple moving averages. Our swing timing model has 4 signals based on those relationships: buy long, trending positive, trending negative, and sell short. Currently our swing timing model is on a buy long signal. Swing trading utilizes a much shorter term setup than can-slim. These setups, both long and short, are short-term consolidations, flags, and bounces from significant moving averages. These setups can be as short as 5 days. Our swing trading targets are typically going to be about 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to our rule sets. So let's take a look at the Nasdaq Composite. Yesterday, the Nasdaq closed well above, or at least above, its 5-day simple moving average, which we show in pink, its 10-day simple moving average, which we show in green, and the 5-day is trading above the 10-day, which is our definition of a buy long signal. We currently hold only one swing trade position, and that's AMH. We bought AMH on this breakout from a short-term consolidation, and we continue to hold it, but notice that it closed just slightly above its 5-day simple moving average. A close below that 5-day simple moving average would cause us to sell the position. We closed 3 positions yesterday. We were stopped out of all. We stopped out of Paycom, GIMO, and Tesla Motors. We were stopped out of all 3 positions when they triggered our 3% stop loss yesterday. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.